Okay, everybody, it's me, Gregory Mannarino, and you know something? I'm in a really good mood today, and I hope you are as well, people. Honestly, forget everything else. It's all about your attitude, and if you stay positive, well, what can I tell you? Everything's just going to be lovely. People, despite the fact that we are in a freak show of truly epic proportions, I want you to consider this. Some of you have been with me for a very long time, very, very long time. And we're kind of like a family in a lot of ways. I look forward to doing these things. I love interacting with you. I try to look at the questions and take them into account. And I just appreciate all of you from my heart. And I just want to say that just right off the bat. Now, on this lovely Friday, February 18, 2022, we need to talk. And I want to start off with, instead of the market, usually when I finish these things or my post-market wrap-up, or even in the morning, I like to start with the market, but not today. I want to bring something to your attention that is disturbing to me. Look, I always tell you that we are responsible for each other and we should really care about each other and love each other. I want you to consider that when I'm about to tell you. So with regard to economic news, we're being told repeatedly that our economy is strong. Everything is great. Meanwhile, again, we haven't had a single piece, not one piece of good economic news in years. Literally years. It's all a distraction. It's all distortion. It's a lie, and it's propaganda. And I'm going to prove that to you right here. So part of the economic news that we got today, or the piece I want to talk about here, is this. People today, I'm reading this, are applying for public assistance in greater amounts than we've ever seen. Does that make sense to you? Again, we have an environment of surging inflation with no end in sight. No end. I'm promising you this right now. I've been telling you this for the longest time. It's not by accident either. I've told all of you that if you're a member of the middle class, you are under direct attack. I have said you have a tattoo of a target on your face. Now, this proves it, at least to me, that my call is correct. And this breaks my freaking heart to find out that people today are now applying for some type of government assistance in greater amounts than ever. Now, that's exactly what you would expect to see in an environment like this. I have told all of you that our economy is in free fall. We are collapsing globally. This phenomenon is deliberate. This is the action of central banks who will continue to lie to you. Let me just put a perspective on that. I have urged you and told you the truth is hidden in plain sight. Now, if you are so inclined, as you are watching this video blog, well, let's do this together. Open up a search engine, pick one, and I just want you to do Federal Reserve balance sheet. Click on that. Once the Federal Reserve balance sheet shows up, just to make it easier for you to visualize, just click on, there's a tab, 6 months. Now, I hope you're looking at that. Check out November. November is where the Fed said they were going to begin to taper. If you look at the slope, it never changed. The pace of purchases has never changed. They are continuing to buy assets as if there were no taper, because there isn't one. Okay. I know a lot of you are concerned about this market here, what's going on as of late. And I want to share a chart with you to put a perspective on that view. But in my view, I don't see a single red flag. I don't see it. You know what? Hold that thought. Let me show you this chart. This is a 10-year chart of the S&P 500. Okay. Now, you see these three circles? This is where we are now. Every time we've had this kind of a move, you get the same thing. You get the people afraid, panicking, fearful, calling me out. Greg, you're wrong. It's over. This is really it this time. And they're consistently wrong. They're focusing too much on the stock market. All right. What I always tell you is focus on the drivers. Okay. Debt is the driver. It's the main driver of this market. All right. Now, I've explained to you the importance of watching the 10-year yield. The 10-year yield came down over the last couple of days. What does that tell us? That means cash is going into the debt market. When the 10-year yield drops, cash is going into the debt market, seeking safety, believe it or not. That's the safety trade. Knee-jerk higher in the dollar, Dixie or the relative strength, stocks fall. That is a fear trade. Here we had it. Here we had it. We're having it again. Now, if you go down or up this line, you're going to see there's other areas where we dropped. Every single one of those times, we get that group of people who panic, fear. And I'm going to tell you right now, people like myself, when we smell fear, we get giddy. You want to capitalize on things like that. I don't want anyone to be afraid. I don't want anyone to make mistakes. But if they're going to play that kind of game and they shouldn't be in the market, they're going to get eaten alive. I think you already know that. Now, with regard to the debt market, when you see the 10-year yield drop, and you are clearly realizing how that mechanism works, cash is going into the debt market, should make it easy for you. Hold that thought. Okay. Should make it easy for you to understand the mechanism. Cash going into the debt market, 10-year yield drops. Very, very simple. Dixie, relative strength of the dollar higher. Those two things right there. Bing, bing, bing. Fear trade. Stocks tend to sell off. Okay. Fear is very, very powerful. There are two drivers of this market. Two. Fear, greed. Fear is much stronger. People get irrational. Read the comments on my last several videos. You will hear all kinds of nonsense. And people that lashing out at me for whatever reason. They want to lash out at me. Oh, Greg is wrong about this. Oh, Greg is wrong about that. Blah, blah, blah. They always fail to talk about things I'm right about. But they want to point out these things to all of you. Look when Greg was wrong here. Look when Greg was wrong there. Yeah, look, I've admitted to all of you. You want to hear it again? I'm not always right. But I try my absolute hardest to be right most of the time. Okay? And I think for those of you that have been with me for any length of time, you'd have to say I'm pretty much there. Now, with regard to the debt market being a driver of the stock market, okay, I'm going to try to put those of you who are fearful that this is the meltdown at ease here. A move lower in the 10-year yield is not what we need to fear. A move higher, substantially sustained, 2%, 2.5, 3, 3.5 in rapid succession, that is how we will know the big meltdown is happening. And it's not going to be in the stock market, people. It's not here. It's the debt market, which is a hyper bubble. Believe me, I know that. I talk about it all the time. I explain to you repeatedly that we're going to get an implosion in the debt market. What that means is cash is going to bleed out of it, not go into it like we've seen lately over the past couple of days. When cash bleeds out of the debt market, what does that do? It causes rates to spike rapidly. And the opposite effect of this will happen on the stock market. We've been having suppressed rates. When rates skyrocket, well, the market's going to bleed off. It's going to bleed off rapidly, and we're just going to get a movement of cash from one set of assets into another. It's very, very simple. It's so easy to understand this concept. Okay, I would believe that most of you understand the concept that we are in a debt market hyperbubble. It's a Frankenstein. I've used that exact word for I don't know how long now. It is. And it's being fueled by runaway central banks who are looking for every excuse possible to continue to inflate. The power of central bank resides in one thing: their ability to issue debt. They are not going to give that up. There's no way they're going to give up that power. They will look for other reasons, excuses, create things to continue to borrow cash into existence. It's the nature of the economic model we have. It's debt-based. It's not wealth-based. Understanding that mechanism should make it very, very easy for you to realize what you need to be doing to capitalize on all this. I tell you all the time, you do want to be long the market. Until we get a red flag in that 10-year yield, which there isn't any. Okay, we had a yellow flag recently. I told you, I did a whole video about it. Look at my video archives. I even put a yellow flag. There was a yellow flag. We had the 10-year yield spike like 10 basis points in one day. That's a yellow flag. But the market adjusted to it pretty well. I told you also, please understand, we're going to see the 10-year yield settle above 2%, and I think the market's going to get off on it. Once all this nonsense balances out, okay, what do we have going on? This Russia-Ukraine thing is weighing on this market. And again, if bullets start flying, the market's going to get a hit. Global markets are going to get hit. We're going to see a massive fear trade. Massive. You're going to see cash flood, run, pour straight into the debt market. 10-year yield is going to drop substantially. You're going to see the dollar go much higher, and stocks will sell off. What is that? Fear trade. Clearly a fear trade. Let me explain to you what's going to happen. The investment banks, the big Wall Street hedge funds, guys like myself and my lions, if you have some powder dry, we're going to buy. All right. Now, look, I understand not everyone has a big enough bankroll to keep buying these dips. You buy the dips when you can. But just as an example, if you would have bought, I don't know, right here, let's say you bought right here and you held on to, I don't know, ticker SPY, and you didn't buy any dip and you just rode, look how much money you made. It's been unbelievable. Had you bought these dips along the way, you increased your rate of return. You understand? It's not hard. But I see a lot of people don't know where to look. And I tell them all the time, stop looking at this. This is a derivative. The stock market is a derivative as to what is happening in the debt market. And if the debt market right now is telling us, hey, there's a fear trade on, cash is going into the debt market, it's not coming out, what do you want to do? You want to do nothing? Or do you want to sit back and understand that you should be staying in the market? And if you are so inclined, buying it. I've been buying every dip I possibly can here. Okay, you know I'm really big into the banks. My lions all know this. They know why. They know what I'm doing here. At the same time, keeping my portfolio, and I hope you are too, hedged. You're in risk-off assets at the same time. And you know how that plays out. I'm not going to go over it again. It's just an ocean of cash is going to move as the debt market bleeds. The stock market's going to bleed, and that cash is just going to move in a tsunami style right into commodities, physical gold, silver. Forget about where they're going. I mean, I just threw out a number yesterday. I said I believe that gold is going to be twice the Dow at one point. It could be 1 times the Dow, but it's going much higher. There's no doubt about it. I mean, I think most of you are aware of how it's going to work. It's always the same. Risk on becomes risk off. When we are in a risk on environment like now, this is what you get. Okay? When you're in a risk off environment, this is what you get. And when the stock market bleeds off like that, okay, the cash doesn't go to money heaven. It's going to move. It's going to move into other assets, things that have been suppressed for a very long period of time, okay? I don't think no matter what JP Morgan tries to do, they cannot stop they don't even want to. Again, at one point, why do you think, for example, JP Morgan, the number one rigger of precious metals in the world, is doing it? So they can acquire these things at unbelievably suppressed prices only because at one point, this stuff is going to the moon, in my view. Gold and silver are going to the moon. Silver will remain the most undervalued asset on the planet to me. And I love cryptocurrencies as well. You know why. I believe sincerely that the entire market capitalization, as I've been telling you, of cryptos is going to go 4 or 5 times higher. When that tsunami of cash moves, it's going to just look for places to go. It's not a hard concept to understand. Risk on becomes risk off. Okay, that's how I see it. And markets always run in these kind of cycles. And in my view, this is not going to stop. This is not going to stop. The Federal Reserve, as we already know, never tapered. They have no intention on doing that. The Federal Reserve will not be meaningfully raising rates. In fact, we got some news on that I'll talk about in a second. The Federal Reserve will not be unwinding its balance sheet in any meaningful way. They do not have any intention to stop inflation either. And the fact that we have people now, American citizens, applying for some type of government assistance at their fastest pace ever is very troubling to me. Because the lie is, well, we're doing great. We're all rich. Are you rich? Well, I'm sure some of you are, but I'd be willing that most of you are not. And this environment is hurting you. And it's not by accident. It's really not. And you need to do something about it. Anyway, let's stay with the market real quick. Bitcoin around 40,000, just over. Gold and silver relatively flat. I already told you about the 10-year yield coming down. Dollar higher. Crude oil, WTI still around $90. All right. It's going to correct. I don't know when. And when it does, that's not a good thing. It's not a good thing because we're going to establish a new floor. Crude's going much higher. The absolute strength of the dollar is dissolving. Okay. Its relative strength is high. Relative dollar strength relative to other currencies. Okay. Its absolute strength is going away. Henceforth, surging inflation. Henceforth, people applying for some type of government assistance. And that mechanism is also deliberate. They need people dependent on the system. The more people that they can get in the government roster that depend on the government, the stronger they become as well. Because again, people, they're desperate. They want people desperate. And I think they're exactly succeeding with that. Now I want to touch on this here. So I wasn't going to talk about this, but I'm going to. Our favorite, I know he's my favorite, software developer, college dropout, Bill Gates is warning of another pandemic. Not only is he warning of another pandemic, okay. Oh, by the way, he did get an honorary doctorate from Harvard. Okay. But this is what he said with regard to, and I want to hear from you. So Bill Gates warns another pandemic is coming. Speaking at Germany's annual Munich Security Conference, Gates said that a potential new pandemic would likely stem from a different pathogen. Oh, okay. So, he's a microbiologist as well. Anyway, he added that the world should move faster to develop and more vaccines, calling on the governments to invest. And he ends with, we will have another pandemic. Question. I know Bill Gates has a fan club and I am ready. I know I'm going to get bombarded with hate. Whenever I talk bad about Bill Gates, this has happened to me time and time again, people hate my guts. All right, look, I'm just telling you what happened. If you don't believe this, look it up for yourself. So I want to know, is this a warning? Is this a warning or a threat from Mr. Bill Gates? Anyway, let me know your take on that. I really do want to hear from you. Now let's move on a little bit longer with a few more things. So we heard from Federal Reserve President Evans today. Now they're doing this same game. They're keeping the market off balance. Fed President Bullard has been floated out multiple times talking about aggressive rate hikes, how that we need to do it. Now Fed Evans comes out totally contradictory. He is saying here that restrictive rate hikes are not indicated. Totally contradicting Bullard. Oh, imagine how surprised I am about that. This is what they always do, people. They play this game, this back and forth twisted game. But just keep your eye on the ball. For those of you out here, look, I don't know everything, okay? I really don't. All I know to do is keep my eye on market drivers. And that has proven to be unbelievable for this market. I mean, come on, people. Do I need to show this to you again? Look, we dropped here. We had the panicking people. We dropped here. We had the panicking people. We're getting a drop here. We get the panicking people. Where are the red flags? We have cash going into the debt market, not coming out. When cash comes out, that's the tell. I'm telling you, we don't have to guess. You and me are the people who understand the dynamics of this. There's no guesswork. There's no guesswork here. When we get that rapid spiking in the 10-year yield and we see what's happening in the market, which will be a rapid sell-off, we got to go. We get out of the stock market. We watch our risk-off assets balloon. I got you set up. I really believe I do. Okay, if you've been with me for any length of time, you have your portfolio set correctly. I even told you, again, I did an entire video about how to hedge your long positions in the market with protective puts. I laid out word for word how to do it. If you did, you made money. You made some cash. I did not do that. I have a very high risk tolerance. I am looking for more opportunity to buy and add to my core positions, okay? Large cap, dividend paying stocks, blue chips, all right? I happen to really like the banks right now. You know that. Why? Why does Greg like the banks so much right here? Because I believe that the banks that I've been telling you, JP Morgan, Goldman Sachs, and Bank of America, we got a warning today on the stock market from Bank of America. I believe they are well positioned moving forward. And these institutions, they're just not going to lose. So you wanna use that to your advantage here. In my view, you're allowed to have your own perspective. You can stay in Federal Reserve notes if you feel like that's the safe place to be, although the dollar's value is dissolving. You can transact in the fiat currency system issued by the Federal Reserve and think you're doing the right thing. Well, guys like me and my lions are, oh, they're bad. You're a bad, bad boy, Greg. You're telling people to buy the banks. Meanwhile, they're participating in the system. But I'm the bad guy here. And I'm the one trying to tell everyone how to beat it. Anyway, look, you take what I say with whatever you want to. Does it make sense to you? I covered a lot of stuff in this video. Does what I said make sense to you with regard to the debt market? How the stock market is a derivative of the debt market? How if we watch the 10-year yield alone, if you just want to watch that, the movement of the 10-year yield, you're going to know with a large degree of accuracy when the big one's coming. There's no red flag here. Honestly, people. And anyway, look, I think I covered enough with you. It's a long video. So what I'm going to do, people, is tell you, number one, the stock market is closed on Monday. But you're going to see me anyway, because I'm going to do my markets a look ahead on Monday. So you won't see me Sunday like usual. You'll see me Monday for my markets and look ahead. Keep your eyes on this whole situation, Ukraine, Russia. You know my take on this. I'm not going to repeat it. We'll see how it plays out. We really will. And we're going to take advantage of no matter what happens. I told you how to do it in this video blog. And if you have any questions, ask one of my lions. And if you can't find them on this blog, go to my website, traderschoice.net. There is a lovely chat room there filled with some really smart people. A lot of my lions are hanging out there right now. Go talk to my lions. See if they agree with Greg Mannarino. Well, I would be willing to bet they do. People, bring it in. Bring it in. You ready? Let's do it. Love each other. Care about each other. Be charitable. Again, I'll see you on Monday for my markets to look ahead. Looking forward to that. I love all of you. I mean it. And I am out of here.